Good afternoon, traders. This is Christian from Hertz Trade Group, and this is your end of day market recap for Tuesday, February 13th, coming to you from downtown New York City, where we were supposed to get, I don't know, half a foot, 1 foot of snow, something to that effect. And of course, we don't get any snow. That's been that has been the situation for a while. It's like the boy that cried wolf in terms of, oh my God, big shelter, you're going to get a lot of snow. And we basically had snow flurries and mostly rain. So I took a picture this morning of the New York Stock Exchange as I was walking by, and I'm like, I have my snow boots on and there's no snow. So in any event, obviously, you don't want to hear me just talk about that. Look at all the red on the screen in terms of the price action for the day. So I'm going to review a couple different things. I don't talk about the VIX that much in these end of day videos because the VIX has been pretty boring, right? And we know that the VIX has been, really subdued for, for the last couple months almost. Really it's been kind of hanging around this 14 level, or less than 15 in the last yeah, I would say in 2024, was trading between, 14, the high of like 1450 to all the way down like in the 12 handle a little bit. And we got down there a couple times around that 12 handle. And, usually what happens is you do get a little bit of a spike in volatility. But, right now, one day is not a trend. So you're going to hear me say that probably a lot in this video. We just don't have enough information and whenever we see a little bit of a spike in volatility, you don't have enough information to really say, hey, is the volatility over with? Is it just getting started? Or is it, something in between? And right now you could see that I think the one thing that that you could see from this chart for now, right, is that the VIX has been making a series of lower highs, right? For a while, going back about a year, the volatility was heightened. It was staying between like, in the 20s to the lower 30s, right? It never really got to that 40 level, right? And then it started to really kind of come in a little bit and made that last attempt, which was all the way in October of 22, where it kind of hit around 33. And then since that time at the end of 2022, it's been just slowly kind of moving lower. And, so my point is, there's going to be these what I refer to as, the word that I always use is, I call them bouts or fits of volatility, right? Where you're going to see this spike up for a couple days, volatility hangs around, and then it comes back in. And sometimes it is just like a 1 day type thing, and then we really kind of trail off and go back into the range where we previously were. So could that happen? I mean, we hit all the way, looks like a high around like 1780. So it's kind of, I actually think it's kind of nice, because when you're sitting there and the VIX is around 13 or 14, and that February is one of the worst months, seasonality one of the worst seasonal months of the year. I think it's the third worst. So, when we're sitting down at that range, that volatility is coming, right? It's very difficult to predict the exact day, but, just like we said in the weekend video, right? We said, hey, we've got more events. It could have been a couple weeks ago when we were jam-packed with events with the Fed and all the earnings reports. And then this week with the CPI report and, earnings reports, monthly options expiration. So there's always something, right, that the market could be fixated with, and that could cause a little bit of short-term volatility. So we finally got it today. I think it's an encouraging sign. I'm just looking at this, that we didn't have a full green bar for the day. Normally, when we see like a very where the body of the candle is like a full body and there's very little wick on the candle, then I usually think that volatility is going to continue. But really, at the end of the day, buyers kind of stepped in a little bit, and there was a buy program. So the other thing that I normally watch too is the VVIX, right, which is the volatility of the VIX itself, and kind of same thing, right? I mean, again, it's too early to make a determination, but you could kind of see other what I always do is I do go back and look at other situations, right? Like here's one. right? Here's what, there's a bunch of these. So, we will need that more confirmation of another day. And that's where also, I really rely on the price action, right? I look at several different things. By the way, what a move in in this lift after hours. Look at all the VPOCs being taken out. Look at how it's just given back the gains, by the way. Crazy stock, crazy stock. All the way up to about $20. And I think it's trading all the way back down to 14. I did not trade this. I normally I don't trade underperformers, but it is a reminder, like if you give a shot to some of these names on earnings in options, right? You should, and I say this to anybody who's traded options, if you don't know how to delta hedge in the after hours market, you should not be trading options, right? Delta hedging means that, if you're long an option, right, you could sell stock against the option and that locks in the gains, right? You should know like your ratio, right? Your, in order to lock those gains in, because they can poof, they can go, it could be in the after hours market where all of a sudden you've got a huge winner. And if you think that you have to wait till the open to sell that option, right? That is not how it works, right? That's the option, but you could sell stock, right, up at $18, $19, right? And that essentially locks in your gains. So you're sitting with a long option position and you're sitting with short stock. You should you can go through and figure out what the delta is so that you can basically, lock in your gains in the after hours. But it always makes me think of that when I see a move like that happen in the after hours market. And, so it's very important. And I would not be like, if you don't know that concept, then I would stop trading options and make sure that you understand what that means and understand implied volatility and theta decay and so forth. But, some people just go off and running and they don't understand these concepts and they end up, suffering because of that. So let's talk a little bit about this SPY chart for a minute. So I want to start with the daily chart. And then we will go ahead and we'll talk about that. And then once we get through the indices, we will talk about some of the stocks that were showing relative performance for the day. So first of all, when you're looking at the SPY chart, right? One of the things that as we've been moving higher here, is just realizing that, we were above the 5-period moving average. For me, that tells me just to continue to ride the trend, right? Unless we really get a little bit of toppy. And we did, we got to, and I think you could see this in S&P futures too. If we look at this way too, let's look at S&P futures, right? Just a little bit more clear on my chart. That we were moving above the 5-period moving average like this. We did get a little bit extended, right? This is something that I wrote about this morning, saying that we reached the second extension away from the February value area. So that's kind of an area that can be an area of a potential pause. I'm not, I didn't call that. I didn't sell the market short or anything at that, but was just noticing that we did hit that second extension, right? And so price did lose the 5-period moving average, and we got another check back to the 20-day moving average. Now, if you look back at this chart and you say, hey, how many times have we checked back to the 20-day moving average and then we bounced, right? And I think if you go back, it's not every single time, but the 20-day period moving average check back is usually a pretty good signal. Now, again, I don't like to just go and start buying. I like to wait to see if that holds, right? And then if we go to the 1-hour chart, what you're going to find here, let's go to hour. Did I do that correctly? Right. So you're gonna see that we broke through the whole value area. So we did a webinar last night, and we were talking about the MarketWebs using TradingView, and we did a whole webinar about some of the new features and so forth. But as we were going through the S&P chart, I said, that's interesting. We have the 80% bearish rule that's in place for this. And let's see if I can just bring this up here 1 second for you guys. Let's see. So I wrote about this morning, and I was talking about new development here on the 1-hour chart, which is what we went over last night. Price fell into this week's value area. The 80% bearish rule is in place, meaning a move from one side of the value area to the other. Also note, we did not hold that, meaning if price cannot retake back above here, that there's an 80% chance that price travels all the way down to 49.68. Now, look at how today unfolded, right? So not only did we get that, and we kind of hung in there. This was around what midday, I think, where we bounced a little bit. Yeah, around like 11 o'clock, 12, I think 11:30 is as far as we went, right? And then we saw volatility, really creep back into the market. And that's where the VIX hit its high for the day. But we did take out this version point of control, right? So that's, again, it's almost as if like it's almost like a gap fill. We went back and price searched out where there was a lot of volume, a lot of buyers and sellers previously. We took that and we bounced. So I mentioned, just to rewind a minute, I mentioned that the 20-day moving average is something that I'm watching on the daily chart. I use the 1 hour chart because sometimes I can see these signals a little bit clearer. And I think, for me, and again, I didn't go long here at the end of the day, but 49.6850 is a level that you can be long against as we move back into this value area. And what's nice about this, and I like trades where I know where I'm going to be correct and where I'm going to be wrong. If we push back below here, right, then I would say, then the trade doesn't work, right? And I did a couple of those trades today, right, where I said, okay, let me try a trade, and we spilled lower, and I got long a little bit of Palantir, and I had to take the trade off, right? It wasn't working, and decided to bail on that trade. Sometimes that's how these days are, right, where the volatility is as high as it is right now. We could also look at do this exercise for the Qs. You're going to see something similar here. We kind of went down to the bottom of value and we held it, right? And we're staying inside the value area. So I think these are the two, out of all of the, the indexes, the averages that I watch, I really, unless I see something really compelling on the other charts, the diamonds or IWM, often I find better signals using and more relative strength right now in the Qs and in S&P. So same thing, we got a test of the 20-day moving average here in the Qs, right? Break of the 5-day moving average. Also, we're coming in and we've got some support here at the top of value for the month. All right. So all in all, like, I think this is a good reset. I'm going to talk a little bit about IWM too, right? Notice what IWM did today. It got hit harder. It did have a break above the value area for the month of February. I mean, this is tricky. And I think, I've said this for a while, but I just think this IWM is very tricky, right? It's been whippy is a word that I've used over the last couple of weeks. And I think it just continues to act that way. And notice it came back to the 50-day moving average again. 50-day moving average has been a good buy point, right? But, why? So let's talk about why this fell so much. This was down 4% today, right? And of course, that goes back to the knee-jerk reaction that we saw in interest rates. So even though I talked about like a potential positive with the, looking at the S&P and looking at the Qs, what really has me concerned is a chart that I really talked about last week in most of my videos. I talked about it in Substack, how I said that this is the most concerning chart that I have, really because we are now breaking the value area. And I think I may not be adjusting for dividends, but we could look at this on a Thinkorswim chart too, just so that you could see the weekly value area. But we're breaking this value area for the year, right? And to me, that means that this is no longer moving sideways, right? But now price is starting to break down again. Now, this is a developing weekly bar. We've got a couple. Now, the good news is we have Wednesday, Thursday, and Friday. Perhaps price can rally a little bit and get back inside. That would make me feel a little bit more comfortable about this market, because I don't want to see rates continue to go higher. I think that will be very bad for the market, and I think that volatility in the equity market will stick around if you continue to see a move lower in TLT and a move higher in interest rates. Remember, these things are inverse, right? So when I say bonds go down, that means interest rates are going up. It's just how a bond works. I try to explain that because I know some people aren't that familiar with how a bond works. But here's what the yields did today, and the yields really jumped on the long end of the on the short end of the curve. Look at the 3-year rate today. It was up 20 basis points, right? Or the 5-year, right? Depending on which one you like to use here. And here's what rates look like, right? And we can go back and we can look at, maybe the 5-year chart here. But, for a while, this has been kind of going sideways, but you could see we're not at where we were, in the highs of last year, where, again, that was kind of where volatility really picked up, in September and October of last year. It was not a coincidence that yields were on the highs there. So this is a big move, and this is concerning to me, right? Just like when we look at the longer end of the curve, right? Speaking of which, right, what did this jump in inflation, the report that we got today, which was, ticked a 1/10 of a percentage point higher, right? So first of all, is that this big of a deal, right? 0.3 versus 0.2, 1/10 of a percentage point, which could have some error to it. No, it's not that big of a point. It's not that big of a deal, in my opinion, as it's just one report. But you have to think about where the indices were, right? They were overbought, and when they have all that good news baked in, and you're going to hear this a lot, or you probably heard it a lot the last few weeks, was that the indices were basically priced to perfection. So that means you just get a little bit of bad news, and this is what happens. Volatility really moves, and that's why we don't like when there is no volatility for a while, because any bad news is going to cause the market to really come in pretty decently. All right, so that continues to be what I'm most concerned about. The dollar also had a strong day today, as well. Right, and we could look at UUP here. Right, we talked about just make sure that this is, I don't have this adjusted for dividends. That's why, right? For a while, we were hovering around this virgin point of control. We've now stepped it up, and we're now challenging last year's highs. So that's also a no-no. All right. So we've got some levels to watch on, in the major indices, and whether or not they're going to hold where they are, and the check back to the 20-day moving average. But these types of things, like I don't think, if the dollar continues to move higher, rates continue to move higher, then I have a hard time believing that the S&P is going to hold short-term support. Same thing with the Qs. So I think these two things continue to be a must-watch: the dollar and interest rates. And and that's the information that we have on hand so far. So, what do I think, in terms of positioning and risk management and so forth? I mean, I take off trades when this type of thing happens, right? I mean, in my trading, I'm a trend trader, so I try to ride these trends for as long as they last. I go back to the S&P just for a second, right? So while this is happening, right, I'm basically trying to ride this out. Right. I know that when this turns, right, I'm going to give back a little bit of P&L, which is what I did today. But I'm still up, for the month. I took so many profit targets in some trades. I was long CRISPR yesterday, and I took 3 targets in it yesterday. Right. Like, why would I do something like that? Right. Because again, it's a riskier name, and when the market is priced to perfection, I'm taking targets faster, right? That's the adjustments that I would make. If I thought that interest rates weren't doing what they were doing, or the dollar wasn't a concern, then I would have maybe taken 1 target yesterday. But I took 3, and I did that with a number of trades too, where I really just took some quick targets. Amazon was another one too, where I made sure that I locked in a good amount of profits. All right, so some names I mentioned, I wanted to go through some names that saw some relative strength for the day. I mean, again, most of the area, look at, how many areas were down for the day, and down pretty decently. There was not a lot of areas that rallied. after the open, right? This is what this column is for. You know, what was the percentage change from the open? The crypto stocks did well. The semis, right? Also, I don't have this highlighted, but software did well. Tech was up 0.5% from the open, right? So that's where more of the like the buy the dip mentality was. Now I know that there was a Bank of America report out, their fund manager survey saying that tech is overcrowded. I agree with them too, right? That's where a lot of names really look stretched coming into this week. However, in a rising rate environment, some of those areas in tech, even I'm not going to bring up the Apple chart, but Apple has a huge amount of cash. They've already refinanced their debt, right? They don't have to worry about, what interest rates are doing to the extent of, a company that has a lot of debt on their balance sheet, right? So that's why those names most likely will hold up a little bit better if TLT continues to go down, interest rates go higher. So, oops, wrong chart. CrowdStrike, right? Just impressive. Came into the 20-day moving average and it holds again. It did not take out the 5-period moving average, right? So this is what I'm watching, and this is one of my charts of the day. So when we go to the 1-hour chart, right, we've got a nice level to watch here. So this could have been a trade. I didn't trade this morning. I watched it. But here was your balance at the bottom of value. This was at 306, and the stock went all the way up to about 324. Now, this is where the heavy lifting has to come in place, right? And that's why this could have been just a trade, right? And the next trade is if you're looking for CrowdStrike to maybe get back above its value area, which is 324.50. All right. So that's the level that I would watch there. Similarly, Palo Alto, right, on the 1-hour chart, right, you're going to see this did not make it all the way through the value area, so it's still highlighted in pink, the bearish 80% rule, and that's in effect unless Palo Alto gets above 372.44. If you can't see that on your screen, I am highlighting that for you, right? I'm giving you that level, 372.44. And by the way, you can sign up for this. As we've been highlighting over the last week, right? You could still go and get your free trial right now. We're going to take this off. I forgot to actually do it today, but right now you get a 30-day free trial. The monthly charge will be $40, $39.99 thereafter, but you could check it out for a month. We're going to take this off, and we're either going down, I think, to a 10-day free trial after this. But for today, you can still get it, and you can get the MarketWebs, and you could also get the webinar that we did last night with the explanation of the MarketWebs and trading view. All right, so Palo Alto. Let me keep going here. I thought Microsoft too. Again, I was just doing a lot of browsing today, just watching. Microsoft, I would watch that bottom of value level. So again, maybe not as nice of relative strength as the two names I just mentioned. Uber, I'll be watching tomorrow. All right. Notice what Uber is doing in the after hours based on what Lyft is doing. Let's just look at the daily chart first in Uber without looking at the after hours activity. But same thing, it kind of came into its 20-day moving average, and you're going to see this with a lot of names that are in uptrends, right? You're going to should see a similar pattern play out, right? Move, back below the 5-period moving average, move to the 20-day moving average, also clips a little bit the top of value and holding. So this could be an entry with your stop just inside the value area. All right. So that's one possible trade. Another one that I'm watching in the retail space is Deckers. Right. I don't think I'm ready for this one yet. We'll continue to watch. Right. Another strong earnings name. I wouldn't mind if this actually fills the gap. I don't know if I'm going to get that, but I think it's still a little bit too risky for my take in here. Of course, SMCI, I can't believe I've made it all the way through this. I did trade this one today. And I just viewed this as a really risky trade because the bid-ask spread was pretty wide for the day. Right. We can kind of look at this on the 5-minute chart too, right, which will give you the value area. So I just traded it. I was looking for the 80% rule this morning. I didn't get, I took a few targets in here, and then I took my last one in here. I was looking for the top of value, which was right around 800, and I didn't get it. So the second attempt, I got out of the trade and just kind of watched for the rest of the day. But interesting where it is, right? It gets to the end, it gets to the high of the day at the end of the day. And then of course this guy, I have a tough time believing whether or not the trend is going to change here until we get earnings. I think that the trend is in place still here with Nvidia. You know, even though it looks like it had a little bit of a reversal here, maybe it starts to kind of give back a little bit. But you know, I think really what's going to be interesting is their earnings report coming up on the 21st. VRT was another name too that I saw a lot of people watching. Again, I just chose to sit out and not do much today. I did not buy the dip in this one, but this is one that I'll definitely be watching too. You know, really nice relative strength. All right, guys, I will leave it there. You know, that's plenty of charts. I think there's more charts to go over, but I don't want to make this video that long. Guys, have a great night. Remember, one day is not a trend, and there will be a lot to focus on tomorrow. I think overall exciting. I think the market needed this. I think it's a good thing to see some of these names, you know, come back in a little bit. When I put together, like, you know, here's how many names that I put on the watch list in the previous week, right? Let's see if I could just bring this over. Whoops. Right, you could see, I mean, I had a good deal of names that this is last week's performance, right? This week, I had a harder time finding names, and I only added this many, you know, just as it says watch list, right? And of course, like I started to add more names today just to kind of take a look at them, because I said, if you notice, you know, one of the things that I told members this weekend, I was like, I'm not putting Nvidia in SMCI. I need to see them pull back a little bit, and then I'll re-add them to the watch list. So that's what I did today, and had a nice profitable trade in SMCI today. Guys, have a great night. See you tomorrow.